Good afternoon and welcome to It Be Like That Sometimes, Ellie's elegant name of this week's IRS Guidance and COVID-19 update for the week ending 4/20. We're assuming that you have some or a lot of COVID-19 training and information these days, so we're mostly going to be giving you updated information for the things that have changed in the last week. If you'd like, we have 4 hours of original content and two other 1-hour courses posted on our YouTube channel, the Tax Practice Pro YouTube channel. You can access it from taxpracticepro.com, or there's a link at the end of your handouts. As Ellie already mentioned, to the far right of your screen, there's a tab that says handouts. There's probably a red dot next to it. You click on that and you should be able to see three different handouts for today, including a full set of these slides. Today's presenters include Fred Stein, CPA, EA, Ellie Jones, EA, and yours truly, but I'm just along for the ride. I don't offer that much information. Ellie has redesigned our slide to make it much more people-friendly and less John is mad at the world. We'll get you your certificate in about a week via email, maybe shorter. You can always access it online. It comes from our vendor, simplecert.com. Sometimes these emails end up in your spam. So if you don't have it by the end of the week, please check spam. And if it's not there, you can email Nicole at taxpracticepro.com. You can see her email here on the far right. And otherwise, the fourth icon over Ellie does have the link to check your CE. And if you've taken any classes with us in the last 3 years, your CE certificates are there.
Right online.
I noticed that Laura won't admit she's in Liberty. She just puts upstate New York. I went to first grade with Laura. That's how we know her. To earn CE, we have one NASBA or one IRS credit, or CTEC. Actually, and it's missing it. There's also a CTEC credit available for those that registered for CTEC. There will be 2 polling questions. Please answer both. If you answer both, I can give you full credit. I can't make exceptions. NASBA and the IRS sort of frown on that. You know, I personally trust that you were here the entire time, but sadly your regulators do not. This is a copy of the certificate. Here are the course numbers so that we're all nice and legal. Oh, okay. Ellie, you ready?
Yes. Today's objective is to review the law that was passed by the House yesterday, HR 266. Talk a little bit how that impacts the SBA loans. We're going to address IRS options, and then we're going to talk a little bit about some FAQs that IRS released this week, and just discuss very briefly the Committee on Taxation's report. There's a lot of examples in these slides. Some of them come directly from many of the items in the handout, so the numbers will be familiar. We like using examples because oftentimes, I don't know about you guys, but when I'm talking to the clients, I use examples for them. So that's a picture of Congress. And so this is some interesting data that I pulled from the SBA's report on where the loans have already gone so far. They have dispersed 1,661,000 loans through 4,975 lenders. The link for this is in your handout on the It Be Like That links document. And then the other thing is it breaks down how many of each loan. So for example, the largest amounts of loans dispersed, well, the most loans were dispersed between $150,000 to $350,000. I'm sorry, $150,000 and less. Woo, coffee. I just think that's interesting data. So this bill was passed by the Senate on Wednesday and then yesterday by the House. It is an interim bill designed to bridge Phase 3, which was the CARES Act, into Phase 4, if there will ever be a Phase 4. The goal was really to increase funds for the PPP, Paycheck Protection Program, the EIDL, and to get the loans to smaller lenders. That way, the smaller lenders like community banks and credit unions are more able to get into the hands of small clients. And then it also gave more funding for hospitals, provider recovering, and COVID-19 testing. So what exactly was that funds? It is $310 billion for PPP. So I was I was going to put a picture of a guy saying, yes, B for billion. Can anybody get that reference, movie reference? But I decided to go with money instead. Of that, $60 billion was specifically set aside for smaller banks and credit unions. They're putting $10 more billion into the EIDL grants and then $50 billion into the EIDL loans. Of that, for the smaller guys, $30 billion will go to lenders with less than $10 billion in assets. So again, small banks, and then $30 billion to lenders with only $10 to $15 billion in assets. And you know I'm playing with big numbers now because I'm saying things like only $10 to $50 billion. I'm playing with this 350 billion community. And the goal again with that is to make sure that smaller businesses get to it. The Trump administration warned that largely publicly traded companies need to think twice before applying for SBA loans. You may have seen your senator or congressperson talking about the certification in the loan, saying, yes, I'm being financially harmed by COVID-19, so I need this loan. So what SBA is now saying is these businesses need to weigh the ability to access other sources of income. Companies that took the loan under bad faith, and what I mean by bad faith here is that they took the loans even though they could get funding elsewhere, have until May 7th to pay it back without penalty. You may have seen in the news that Shake Shack and Ruth Chris both yesterday said that they are going to give their funds back.
Hey, Ellie, it's bigger than just penalty, right? Because Rubio and some of these guys were talking about prosecution.
Yes.
Right? They were really rattling the saber here.
And yesterday when I was researching, I saw that in 2008, when there was some funding, there actually were a bunch of audits and some cases filed against businesses that took it under fraudulent circumstances. And there was an article that I didn't link because it was an opinion piece on how probably in the next year or so, we are going to start seeing SBA auditing some of these companies that took loans. So the idea that a lot of people are saying of putting your PPP loans in a separate bank account, that's probably good business practice if you're worried about audits in the future. I don't want to define fraud, Mark. It's still early in the morning. So I mean, here it's only 7 a.m. in Hawaii. The Joint Committee of Banking said that the $310 billion has already been spoken for. So for many of your clients who are like, oh, I'm going to apply now, they might not get into anything. So if you had a client that applied for PPP, the best thing they can do now is to reach out to their bank to see if their loan is in queue. If not, gathering their loan documents is a very good idea. One of the things that was suggested was to explore other funding options. SBA has a bridge loan program, and then cities, states, and counties are doing some funding. I know the city of Phoenix did some sort of grant funding for businesses there. So other areas to look at for businesses, see what they're eligible for. For EIDL, also, the title of these slides comes from a very popular Broadway musical. Anybody knows what it is? What comes next? Time will tell. Anybody? For the EIDL, they stopped taking applications April 15th, which we all know is our favorite day of the year. The banking group also said these loans were spoken for by applications already in queue. It is not Fiddler. The best thing to do right now is to contact SBA to see if they received your application. Prepare for a long wait on the phone. John suggested that calling queue might be a very good idea.
They've already added the SBA helpline to their, the IRS is closed. He's got this whole infrastructure. So if you're already a calling user, you can actually access, you have to download an updated card from the website, but he added the SBA loan line, so it takes you to the top of the list.
And got it. It's Hamilton. Obviously. All right. So the SBA released some more paycheck protection program guidelines. It's in the link for it is in the handouts. the big quote that I liked in there is going back to what the Trump administration said. It's unlikely that a public company with substantial market value and access to capital markets will be able to make the required certification in good faith. And such a company should be prepared to demonstrate to SBA upon request the basis of its certification. Again, that's the certification that without taking this loan, they won't be able to get on. They also said that lenders may sell the PPP loans into secondary market after it's fully dispersed. I forgot a Y there. But those are still 100% SBA guaranteed. I asked Fred why the selling into a secondary market matters. He answered. I forgot what it was.
It was basically most likely the feds are going to be buying it and they'll sell them either at a premium or a discount. I can't imagine them selling at a premium with a 1% interest rate. So that is your answer.
You're so smart.
It's less than 1% because it's 6 months, no interest. It's like the Home Depot card.
I thought the interest accrues. We just don't have payments for 6 months.
That's interesting. But you're right, though. But either way, at 1%, it's no good. And the SBA already lost because they paid an underwriting fee for these things to the bank to originate it. So anyway, I'm betting Sally Mae is going to take them over because they're already set up to handle short-term loans like this. So
I like your Sweeney Todd reference, Henry, and I almost made a Sweeney Todd reference later on in the PowerPoint, but I decided not to. I didn't know how many people would get it. There was a specific FAQ on NACIS Code 72. I know I had seen a lot of chatter on the MySpace, Facebook, interwebs on this. It's in your link. You can read it. But I chose this example. I thought it was useful in case we didn't know. Acme Food Corp wholly owns Seafood Shanty and Wabbits Agwait. And as a result, all three are affiliates of one another. Seafood Shanty and Wabbits Agwait each own a single restaurant with 500 or fewer employees. Seafood Shanty and Rabbits Are Great can each apply for a separate PPP loan because each has 500 or fewer employees. The affiliation rules do not apply because Shanty and Rabbits each has 500 or fewer employees and is in the food services business, and that's with the NACIS beginning with 72. And I thought we'd all enjoy some Elmer Fudd. So some questions that we saw are, when does your 8 weeks clock start running? And that's the moment the loan is dispersed for you. So if you get your PPP loan on Monday, April 27th, your clock for 8 weeks starts ticking. It's important to note that on this slide, my math is a little wonky, but the facts are correct. So if an EIDL grant is used or loan is used for payroll costs, the PPP loan must be used to refinance the EID loan. And then proceeds for any advance up to $10,000 will be deducted for the loan forgiveness. So basically you do maximum forgiveness minus the EIDL advance. That's your equation. So if you get a $50,000 PPP loan and you got a $5,000 grant, let's say you did not spend all $50,000 on payroll. Maybe you spent some of it, like in this case, $10,000 on very specific software fees. So your max forgiveness is only $40,000. You have to take the $5,000 EIDL from that. So that reduces your forgiveness to $35,000. So you owe back $15,000 over 24 months at 1% with no payment for 6 months after disbursement of loan. So again, if you got your loan May 1st, you wouldn't start paying till November. Ideally, we'll all be making money again. In Spaceballs 2, the search for more money. All right. This is just some simple clarification. Payroll taxes when determining forgiving. So what is forgivable payroll costs? It's gross salaries and wages up to a cap of $100,000. Employer paid health insurance, vacation, sick pay, retirement matching contributions, and then state and local taxes on payroll. So SUTA counts. It's also rent obligations for a lease in force before February 15th, 2020. and utilities, and there's a definition of what they're counting as utilities before February 15th, 2020. And based on the regs, which we talked about last week, if you are a self-employed person working in an office in your home, the rent, utilities, whatever that's in your 8829 doesn't count towards your forgiveness. And then interest on a covered mortgage obligation on real or personal property counts towards forgiving. And it's important to remember that payroll costs are not reduced by taxes imposed on an employee and required to be withheld by the employer. So fit. So I'm a big fan of the show Elementary, which is on Hulu. And Joan Watson is a boss lady. And so let's say she earned $4,000 per month in gross wages, of which $500 in federal taxes was withheld working for Sherlock Holmes. It would be $4,000 in payroll costs. Joan would receive $3,500, and the $500 would be paid to the federal government. And also included in there, his student payments, his employer health care payments would be included in the forgivable calculations. Although we all know he's a trust fund baby.
Hey, can you hang on just 30 seconds, Ellie?
Yes.
Thank you. So, Fred, a whole bunch of questions up in the chat and the Q&A on forgiveness. So agree or disagree with me. There are still forthcoming regulations on this, right? SBA hasn't written a final document. Yeah,
correct.
So, yeah, so some of these questions that are very valid, does payroll, does it count on a cash basis or an accrual basis? Does the check need to be in that, that last day of the 8 weeks, or is it for the payroll through the 8 weeks? The same thing with my SUTA, for example. My SUTA is a qualifying expense. We had a big debate about this today. And my SUTA is due at the end of the quarter in most states, right? There's no prepayment of SUTA. So we're not sure. Kelly, we're not sure. We're, oh, wait, Kelly has a different question. Hang on. So
yeah, we can take guesses, though.
Yeah, I mean, we can make reasonable guesses. But the other thing, too, is you want your clients all on top of their numbers. You can't. Of all the years, you don't want to be the disaster bookkeeping client who wanders in next August and says, make me my S Corp. We want to be watching that now. Exactly.
And if you can, pay the SUTA with the payroll. Pay it early. You can pay it early. I would imagine with those types of payroll taxes, like we're allowed to with cash basis taxpayers, it's included in the year as opposed to on an accrual basis when you pay it sometimes.
Yeah, I'm more concerned. You alluded to this in a comment. I'm more concerned about the banks because as what we understand right now is the individual bank who originated the loan is going to be charged with looking at your papers and you're going to certify to the bank that I did this stuff correctly. Here's my proof. And then the bank is going to say to the SBA, he did or he didn't, it's right or it's wrong. And that's my concern because you ever sit down with an examiner and try to prove something to them and the accounting gets complicated? That's one of the reasons we talked about having a separate bank account, right? You can just say, look, 10,000 went in, 10,000 went out.
The good thing about it is hopefully the SUTA portion is not that big a component of the payroll costs. So even if they disallowed it for not being paid, you're going to be okay.
Yeah. So let's go back to the I promise you that once those regulations are out, if you give us 15 minutes to read them, Fred, I see no reason why we're not going to do 50 or 100 minutes on it, right?
Another one, why not?
Well, without a doubt. I mean, and Ellie will have time to read it for us, so it's fine. But back to the regularly scheduled program with Ellie.
And they want a polling question too, by the way.
I notice everybody. You ever notice that on the internet, everybody's a tax, a law, or a psychology expert? Lately, they're all becoming CE experts. Just saying, they know my regulations for me.
I think it's really important to note that in the regulations we have so far, to which there's a link in your handouts, they're very broad strokes. And within each broad stroke, there's 1,000 different kinds of permutations. We all know this from the 1040s. We all know this from every aspect of tax law. So I think X details will be forthcoming. So it's hard for us to sit down and be like, well, what if I broke a lease? Or what if I had to move out? Like, what if my building shut down and I had to leave?
I think rent is rent, at least with respect to the period involved. You might have to prorate it, but we'll see. But just one last thing, Ellie.
For self-employed people, the math is not as easy as they want it to be.
True. Well, they don't want you to have a windfall is the exact words that were stuck into the SBA literature. But in the Federal Register, where they published all of this SBA stuff, in a number of spots, it says guidance to be later written, regulations to be provided. So the SBA is probably writing this stuff up now. Nobody needs it for 6 months, so it hasn't been an urgent issue. And I hope all of you that are asking these questions have clients with PPP loans. Anyway. Ellie, finish this slide, and then I can put up the question for everybody.
All right, so there is some further legislation out there. The first one is the Emergency Cannabis Small Business Health and Safety Act. It was put forward by 2 representatives, one from Colorado and one from Oregon. It basically is to include cannabis businesses in SBA programs if states that allow the sale of cannabis products. It's not even in committee yet. I wouldn't count on it. There's also going to be a phase 4, potentially, of COVID-19 congressional legislation. So far, they're tossing around stimulus check funds or payroll tax waiver, including a negative payroll tax waiver, which means people would be getting taxes back, including stimulus checks for college students or adult dependents, helps for states and infrastructure spending. You may have seen a lot that the reason that this new bill, HR 266, was delayed was because the Democrats were fighting over it. They wanted to add the state's funding now. It looks like they're going to try to put state funding and infrastructure spending in the next one. There's also talk for rent and mortgage relief, vote by mail, but we have no timeline. And there's already rumblings within Congress that, we're approaching $4 trillion in our debt or deficit or whatever. And so more bills will only add to that. And is that good financial prudence?
And as Mitch McConnell suggested yesterday, all the states that are in trouble, don't look for federal money, file bankruptcy. That was very nice. Very good. I won't say what Cuomo said after that.
I will be living in Ohio near northern Kentucky that if people want to try to fight with you and you mention you're from New York, they run away.
Our first polling question. You need to answer both polling questions to receive continuing education credit. You don't need to answer them correctly, but we hope that you do. The proposed Emergency Cannabis Small Business Health and Safety Act will federally legalize cannabis, allow licensed cannabis businesses to access SBA programs, provide direct federal loans to cannabis businesses, or repeal IRC 280E. Make us feel bad, Fred. What's the weather out there?
I'm locked in a room here, so I've got no clue. I didn't get outside yet. It is beautiful today. It's going to be 90 degrees, so it's going to be pretty hot. So you guys are getting snow, I think, maybe?
Well, Alexa doesn't reach long enough. Alexa says 42 degrees and rainy outside, so.
Ouch. And I'm glad you guys did that political stuff between you guys, because as everybody knows, I don't like getting into this whole political talk stuff.
Oh my! At least that one is being recorded. All right, so I'm gonna close out the poll. 86% of you got this correct. Allow licensed cannabis businesses to access SBA programs. The bill would not federally legalize cannabis. It won't provide direct federal loans to cannabis businesses, and it will not repeal 280E. As nice as that would be. Now back to our regularly scheduled program.
All right. Oh, this is me. Okay, I got to do work now. That's an IRS service building. You should know what that is. All right. There are rumors out there. Everybody loves rumors. All right. Ogden is slowly reopening. IRS people need to eventually go back to work just like we do. If you're unaware of this at this, what?
Nothing.
Okay. Oh, I see what he said. Okay. Stop that. All right. If you're not aware yet, mail is not being opened at the IRS centers at this point. So one of the first things the rumors are saying is that people are going to go in and hopefully start sorting through the mail. We do not expect this to be a quick process. So don't expect answers to any letters you sent or anything that you did. ACS, mostly open. It's going to be hit and miss. You know, we've heard stories of people getting through and stories of people not getting through. Applications for EINs on and off. Pretty much assume everything with the IRS right now is going to be a hit or miss situation. You're going to get in. You're not going to get in. We don't know. TAS at this point, they are inundated because we can't get through the regular stuff. So, you know, we as tax preparers are being bombarded with questions from our clients and they're anxious and it's an emergency. So we become our clients, and instead of going through the normal channels and waiting, we go and attack the taxpayer advocate service. Don't do that. If it's not a taxpayer advocate service situation, leave them be. Go through the normal channels. This will eventually open up 6 months or a year from now. Who knows?
You know, a thought here is that we can be part of the problem at this point, right? So there's
definitely part of the problem.
So, you know, I read all sorts of things about people out there on Facebook trying to figure out how they're going to mail something in or get a fax or has taxpayer advocate involved. And the answer is you don't need to. Everything's been extended, you know? So unless it's like short of the stuff you're working directly with a revenue officer on, you probably can wait on it. And the revenue officers are receiving faxes. What's up, Ellie?
And on the federal level, remember, states are still working. So, for example, because I'm in Cincinnati, I have Kentucky clients. Kentucky Collections is still running, and they still have people staffing the phones.
That's Kentucky.
State levels, you know.
We won't talk about Kentucky.
I did want to say there was a reference to a musical in this slide starring David Hasselhoff. That's why I was laughing.
Stupid Hasselhoff. All right.
Oh, wait, can we go back to the prior slide?
If you must.
Sorry.
Stop it.
The Taxpayer Advocate Service opened yesterday a tool to help people with the economic impact payments. I wrote this last night, and right after I sent it to John and Fred, Kelly Erb, the tax girl, published an article on it. And so it's a tool that will walk people through what their options for on checking and getting their payment. So if Get My Payment isn't working or you're unsure what Get My Payment's trying to tell you, you can send your client to this tool. It is on the TAS website. It is not on the IRS website.
May I have control again?
Yes, sir. Sorry, sir.
I am Alexander Haig. All right. As we said, they are evaluating their return. This may be a full return. It may not be. They may return and then go home again. Everything is up for grabs. As we said in the last slide, phase one is to go and handle the mail. Excuse me. Most importantly, wages and income, small business and self-employed people. All right. Emphasis are employees who process the mail, the ones that take the taxpayer phone calls, and of course, those who handle liens and levies. All right. What is today's date anyhow? All right. It's not Monday yet. So this coming Monday, we can expect people to be back at work at the IRS offices. Not the entire workforce. Which campuses are which, we don't know. But when you dial in, I'm sure it'll be routed to the right campus.
Well, the one thing we had seen that Ellie and I were talking about is the union at Ogden had some stuff on a public-facing website webpage. So that's where we picked it up, and that's a hat tip to Charles Markham for finding it. So,
All right.
so I think Ogden's going to open it. It was my thought, but
Okay. Return mail, and there's some really good advice here. Whoever thought this up, I can't imagine. They specifically address the Form 706 being returned on delay. Send it back to them. Ask UPS, FedEx, DHL to send it back again. It's going to be considered delivered based on the postmark. If you get it back, don't open it, don't send it again. Take that same envelope, put it into a new envelope, and then send it back again. All right. That is your proof. The proof on the inside envelope is your postmark date, and they will accept that. All right. If you open it, keep the original envelope with the date recorded, put it back in the box with the remailed package.
And this is a good advice for any return mail from IRS,
Yes.
not just that.
Now or in the future. Okay, we got to mute Henry. RALs are updated. Okay, it's a glitch. We've all loved and heard the story about the RALs, and hopefully not too many people here who do them had a big issue with their clients, and nobody got strung up because they thought it was them. All right. We've been told it's been fixed. If it goes to the RAL bank, they are supposed to reject it and return it to the IRS. If they get updated, if they update their stuff and get my payment, IRS will process it according to that. As with everything else, there is no certain timeline on these things. This is a problem for a lot of taxpayers who move. They're going to send it to the last address on file, the taxpayer based on either 18 or 19 return. Updating your address with the post office is probably the best way to get it to yourself. The get my payment error for the RALs. All right, that's another known issue we've been dealing with. IRS noted a reporting error for a few days, just a few. All right, rejected payments are being sent back to the same taxpayer accounts another time. All right, they get actually mailed. IRS has fixed this, supposedly, so let's hope it's been fixed for real. The big thing is that within 15 days of them sending the payment, they're also going to send a postcard indicating how it was sent, and if you didn't get it, a number to call and how to fix it. I've had a number of clients, or at least one particular client who unfortunately also happens to be a friend, get this payment status not available. And his wife is freaking out because she wants her stimulus payment. Right? This comes for a variety of reasons. Some because it should be there. You're not eligible for a payment. Right? It may be there if you did not file 18 or 19, even though you're supposed to. Right? If you filed your return and provided information through the non-filers page, right, your payment status is going to be updated when the process is complete. So if you do it through those, then this page will eventually get updated. With everything else, there is no set timeline whatsoever. IRS is working with SSA or RRB, and anybody gets an RRB 1099 or Social Security 1099, they should be sent automatically. If you don't know this already, if you do not need to file or your client doesn't need to file and has these forms, but they have children, they need to go on and enter their children so that they can get the money for them. Of course, SSI falls into the SSA for the 1099s, and also people who are receiving VA benefits, and that may be all they get. They're going to get their money too, and information is not available in this area for them as well. All right. There is a COVID-19 email. The IRS, you can sign up for all sorts of IRS email lists. Click on this link, go there and inundate your mail inbox with IRS information. All right. You can sign up for as many as you want or as little as you want. I would strongly recommend you sign up for the COVID-19 one so you can be, updated on all this stuff. Daily, weekly, all the time, the IRS is updating the FAQ list as they get their information out there. So don't just read it once and then ignore it. Go back again, because a lot of things, as we've heard today, are not fully clear. So as these things become more clear, the IRS should be updating these FAQs. Most recently, they did the employment tax FAQs and also the NOL FAQs for 965s, which is has to do with foreign income. If you are a Gmail user, you can actually set up a different category in there, and that all your IRS messages are flagged or in that one spot, so you can look at them when you wish.
One thing to note is if your client is getting the status not available, that's when you try to send them over to the TAS website. TAS isn't determining their eligibility. It's all about helping them get their stimulus check. So if they're getting status not available, the TAS website might have better information for them.
Or do what we do and say, hey, we've got no friggin' clue. That's an IRS thing. Deal with them. It's not our issue. Forget that empathy thing.
No feelings during tax season.
No feelings during tax season. We drink to your feelings. All right. This is the end of my slides. I am done for now. Yay.
So one issue reading just so I was not on Facebook to play. There were about 10 people who couldn't get in, so I was looking up links and emailing links to people so they could join us a little late into the program. So reading some of these concerns about clawbacks and things, the one thought that came up is all these folks, they're saying, oh, I got this check from my deceased whomever. Well, hopefully they're not negotiating it, right? If there's an estate checking account open, you can do something with it, but there's not a whole lot you can otherwise do with that check, right? Ellie, Fred?
Not much you can do with it.
Right?
You got to use it for the estate.
Well, I mean, I can't flip it over and pay to the order of John and deposit.
No.
Yeah, that was my point. All right.
And it's important to know that IRS is updating Get My Payment every day. They're doing a big rehaul over the weekend, so tell your landlord clients not to put their tenants in there.
Kathy says, wait till Monday for the updates. All right. Kathy's a smart lady most of the time, so we should listen to her.
Oh, okay.
Most of the time, all the time.
Well, there is that time she went to work for Fred.
Some would argue that. Yeah. The smart choice was not working for John, though.
Maybe. All right. So I don't want to take a deep dive into this stuff, but we just want to make you aware of a number of things that have popped up recently. So as you probably know, there's something called substantial presence, where we count the number of days a non-citizen, non-green card holder is present in the United States over a 3-year period, and we weigh it. And it's one of those things where you get to use algebra in the real world, not just in 9th grade math. And if your person spent enough days over the 3-year average, they find that they might have to file a 1040, not a 1040 NR, and report their worldwide income. So the U.S. realizes, the U.S. Treasury realizes some folks are stuck here. They couldn't leave. So individuals who are in the U.S. who perform services and other activities that are non-resident aliens, if they are not otherwise engaged in a U.S. trade or business while they're here, they can choose an uninterrupted period of up to 60 calendar days, beginning February 1st and between February 1st and April 1st, or actually between February 1st and March 31st. And those 60 days won't be taken into account in determining whether they are here in a U.S. trade or business. So just be aware this is out there if you run into someone, and you'll be able to back out this 60-day window. If you have clients who you know are here or are stuck here, go and take a read of this. It's in an FAQ. If you don't find it easily, email me, email Ellie. We'll get it out to you. And I think that it's something that you want to look at from a planning perspective for people. And then they gave us some further definitions about who is a U.S. non-resident alien for this purpose, who's an LPR for this purpose. And we remind you about documentation, contemporaneous records of when they were here, when they left. Airline tickets are good. Passports are always good because they're stamped when you enter. Form 7200. Form 7200 is our advance payment on the retention credit, Ellie?
Yes.
Yeah. So the IRS, these have to be filed on paper. And of course, the IRS is seeing errors. Now, I find this pretty amazing. The form came out, 10 days ago? and they already have enough errors that they can write us a list, right? It came out after April 1st, right?
Mm-hmm.
Missing EIN, yeah, that would help. Checking more than one box, in other words, which quarter does this apply to? It can only apply to one quarter. Some confusion there might be that you do have that little bitty time frame from Q1, right? From the passing of the legislation, March 27th to March 31st is technically in Q1, but you would need to file 2 forms. Skipping part 1, line B is a problem. Not completing part 2, you can't just, you have to remember in starting in 1st grade, the teacher told you had to what? Show all work. So same thing here. You just can't put down the answer for the money that you'd like. You have to show all work. Inputting the number of. Do you have that conversation with your son, Ellie? You're writing mean things about me. All right.
No, they're not saying not about you.
Oh,
Me.
oh. I see one of the future ex-wives is talking about your coffee. Inputting the number of eligible employees instead of dollar amounts. You have to take your time. Not checking your math. And not signing the form. So some things they can do a mathematical adjustment for example, if the math on lines 4, 7, or 8 is incorrect, mathematical authority under the Internal Revenue Code allows them to fix it for you and send you the adjusted amount. But things such as failure to sign it and not putting your EIN on it, pretty much you're going to get the form back in the mail with one of those flashers that says, try again, please. Makes it wonderful that, there are folks out there that don't want to do anything by hand, and it makes you wonder why. Maybe they can't. So
the common errors on Form 7200 looks like notes from my Algebra 2 teacher.
100%, right? Because, this is... All right, so let's not be embarrassing here, right? But back when I owned block offices, I owned block offices originally in the pencil and paper days. So most returns were reviewed by 2 people. One person for math error, for math theory, another person for tax theory. This wouldn't have even gotten to the tax theory person, right? This is the basic stuff. Is your name on it? Did you sign it? And did you add and subtract correctly? Anyway, so yeah, this is the embarrassing stuff. Let's hope it went to you and not to your client, right?
I'm just glad I have a Misty.
I haven't seen one yet, but can you imagine the boxes checked on the left-hand side, not signed, no name and number, math incorrect. It's kind of funny. All right, so I won't drill down deeply on this either, but neat stuff here. So qualified improvement property, there was a drafting error in the Tax Cut and Job Act, so that 15-year property, we changed 3 different definitions of qualified improvement property, qualified retail improvement property, and I forgot the third one, but there were at least it's a third one. But anyway, there were 3 different versions of 15-year property. They merged the definition, but a mistake was made in the drafting because it's pretty clear they meant this to qualify for 15 for 168K for 100% bonus. And what happened was the drafting said for greater than 15-year property. So what happened? You guys aren't interactive. So we ended.
We're entertaining Henry and Andrew on the side here. Sorry.
Oh, I should delete both of them. So in the end, we didn't have the ability to take bonus depreciation on 15-year property. That's been repaired. We can now actually go back and we can make amendments to revoke or withdraw other elections for years 2018, 2019, and of course we haven't done the 2020 returns yet. Now, an interesting thought. Thank you, Mr. Dombrowski. It's early. What's interesting here is first that how will these interact with NOLs? Because we now have the ability to take NOLs backwards for NOLs occurring in 18 and 19. We didn't have that under the Tax Cut and Job Act. They were only carried forward. But the second thing to be concerned about is we all get excited and see these big numbers you can generate. You can generate a big NOL. You can carry it back. You can put a lot of dollars in your pocket. We run into a problem, though, with state-related issues because, for example, New York State has opted out. I won't ask Freddie. He looks busy. Has opted out of, has decoupled from bonus depreciation, so you wouldn't get that value. And Kathy is saying she went back, did some of these, and generated some nice money for her clients in the pocket today, which is great.
Bless you, Ellie.
Thank you.
But of course, they weren't. I hope they weren't New York clients, Kathy, because you can end up with a New York tax bill doing it. Okay, so qualified improvement property addendums. It doesn't apply to things placed in service if they're in a real property, trade, or business, or made a farming election under 163J. 163J was the changes in how we can deduct business interest under the Tax Cut and Job Act. You can look at Revenue Procedure 2020-22 for that. QIP, as we said, is 15 years. QIP qualifies for bonus depreciation, which I mentioned. And Ellie generously put in there, consider state and local taxes as the considerations for me, and I appreciate that. So under the QIP, there's two options here. File an amended return. You have until October 15th, but it can't be later than the statute of limitations on the assessment, which is 3 years from the due date. Now, we know for 2016 that due date was extended until
July 15th.
Yeah, right? All right. So Ellie gives us an example. Severus Snape, he was a Star Trek guy, right? Wants to amend his 2018 return. Oh, you guys are paying attention. To claim the QIP for bonus. He's going to send in his 2018 amendment, but his 2019 must have the updated depreciation schedule as if the bonus had been taken. So if 19 is already filed, you could end up with a situation where 18 gets a refund and 19 has an amount due. Did you mean hogwash, Dabrowski?
No, he meant Hogwarts.
Oh, okay. Because I thought Hogwarts had a capital H.
Is it time for a polling question?
Again, another person who knows my business. We have to go 3 more minutes because the first 3 minutes were introduction and things. All right, option 2 to get the qualified improvement property deduction. You can do a 3115 with a timely filed return. So with your 2019 return, either before July 15th. Oh, the PPP was signed by the president, so it's now a law. Thank you, Marie, for letting us know and for not paying attention to your continuing education. You would make a 481 adjustment, huh?
She can do both. Women can multitask.
Can they?
This is how polling questions get missed. Making a 481A adjustment on the return and taking advantage of an automatic change would be allowed. That 3115 can be used for changes being made on multiple assets if you have that. Automatic change of accounting method, you use change number 224. And then we have a nice little list of things you need to do on your 3115, which I won't bore you with, but it's on your slides. Okay, so let's do the polling question and then
Watch everybody leave.
no, not so much. At 1 o'clock they'll pop off. Yeah. All of the following is true about Revenue Procedure 2025, except it allows taxpayers to claim accelerated depreciation on qualified improvement property. It allows taxpayers to make, withdraw, or revoke the election. Allows an election out of bonus depreciation. Allows this taxpayer to simply expense their qualified improvement property up to $100,000. 3 of these are true. 1 of these is not. You don't need to get the correct answer for credit. You just need to answer. We do hope that you will get the correct credit. OPR is telling us that we should be using these questions to reinforce the learning rather than ask things about Doctor Who. So
I don't know if you guys can hear my child. He's playing a video game. He's quite enthusiastic.
you playing TurboTax?
No, he's playing something called Path of Exile. I don't know what it is. So while we wait for everyone to take the exam, the polling question, what are our Hogwarts houses? Fred doesn't know. I think he's a Gryffindor.
Maybe.
Gryffindor? Gryffindor.
Gryffindor is probably more appropriate. Who's Doctor Who?
Slytherin.
Yeah, that makes sense. I am a Ravenclaw. Yeah, Ravenclaw.
So is
Ain't no
Emily.
laws when you in the claws.
All right, we have just a couple more of you to vote, please, and we can call it a day.
I believe that, Leah.
It's Leah, not Leah. Don't go there.
All right, I'm going to close this up. The vast majority of you got this correct. 2025 does not allow you to simply expense QIP of up to $100,000. It does allow you to elect out of bonus depreciation. It does allow you to make, withdraw, revoke an election, and for the 2018 and 2019, and it does allow taxpayers to qualify to take accelerated depreciation and bonus depreciation on qualified improvement properties. So excellent. Thank you all for participating. Those of you that need to go, that is 50 minutes. If you answered both questions and you've been on since the very beginning, you can go if you need to, but we hope you'll stick around. The Joint Committee on Taxation released a report. Their analysis.
This is mine.
Oh, this is yours?
Yeah, you're done.
You're done. Shut up.
31 to 38. Oh, got it. Awesome.
It's the Ellie and Fred show now. All right, back off.
Yeah. So the Joint Committee of Taxation released their reading of the CARES Act on April 23rd. These are not necessarily regulations. This is how this committee out of Congress sees how IRS may interpret the new tax laws. There's still lots of questions. And IRS may decide that they don't like this interpretation and go somewhere else.
Stimulus checks are going to go out until the end of the year. So some people may not get these until Christmas time. All right. It's important to know for taxpayers who have 8329 situations who moved. All right. If you don't let them know you moved, you're not going to get your stimulus checks. All right. It's not going to be immediate relief, but it's some relief. This is known, but it's lost in space out there, which is also a very good show. A retirement plan administrator, did John do this slide?
No.
Okay, so Ellie does make a mistake occasionally. May rely on an individual certification that they satisfy the conditions. So as we know, we can take up to $100,000 out of our retirement plans if it's COVID-related issues. The administrators of these plans can rely on a self-certification here. Said distribution is still subject to income tax withholding unless recipient elects otherwise. Mandatory 20% does not apply. What is known now is, and if this is on the future slides, Ellie, stop me, is that you don't need to, you can pay the tax over the next 3 years. And if you pay it back, then that tax is then given back to you. So you're going to pay tax. Here it is. All right. So I'm going to continue that. All right. You can choose two paths to handle the distribution. Pay the tax over 3 years or to treat it as a loan. All right. Hans Gruber took out $100,000 from his retirement plan as he faced adverse economic conditions. During the COVID-19 scare, one of his buildings was destroyed. So he pays 1/3 tax on it in 2020, 1/3 tax on 2021. In 2022, he gets insurance check on the building and he puts that money back into his IRA, into the plan. So you can now go back and amend 2020 and 2021 to take that income off and get a refund. All right, Ellie, it's now you.
And then what's also important to know is that he will not mention that remaining third of distribution on his 2020 return.
Yes, that's what I didn't say.
So the charitable deductions.
Ellie, 1 second. You know, Fred made a crack about your typo before, and I just want to ask you, when did the JCT stuff come out? When did we get
Ayer.
When?
Ayer, yesterday.
Yesterday. And you went and read it. We all talked about it, and you added all these slides when?
Last night.
This morning, yesterday.
Well, late last night, and then you did the edits this morning at like 9 in the morning. So,
and to be clear, it was a crack about you and your spelling, not about Ellie's, because we usually expect her to be perfect.
To err is human, to forgive is divine.
My point is that these got thrown together very quickly. So, thank you. So go on.
Mostly by Ellie, because she's amazing.
And they're in Calibri, which I hate, so I apologize. So, when it comes to the charitable deduction on the standard, we should already know that standard deduction takers will get a $300 above the line deduction. It's good for 2020 only. So 2021, they don't get this. It's by filing unit, not by person. So married filing joint people will get 300. They won't get 600. And it's important to know that, again, it's only for 2020. And the JCT document says that it is for cash filers only, cash payments to charities only. So only money, which is a Star Wars reference. You said it. Now, I put it here in a tiny bullet point. IRS can decide they want to interpret that differently. So again, the Joint Committee on Taxation we can look at. It's not a substantial authority to my understanding. What it does is it helps us understand the law a bit better while we're waiting for IRS to release their official regulations and their revenue procedures and revenue rulings. So if you are an itemized filer or you're a corporation, if you're going, the 60% is now 100%, remember, and that's for cash or non-cash. So our itemized filers can still give us their 50 million goodwill receipts that just have dates written on them. And then any excess will be rolled over to succeeding taxable years. And this is the same for corporations. Remember, corporations are allowed up to 25% of it this year as opposed to 15. And then there is a equation in there about food inventory deductions. So for a taxpayer who's going to do a food inventory deduction, it's either the lesser of basis or fair market value. And then for C Corps, there's a lesser of basis plus half of the item's appreciation or 2 times basis. So for those of you who like math and got really great notes on Algebra 2, this could be useful for you. Nobody got my Star Wars reference. It's from Phantom Menace, everybody's favorite Star Wars movie. Okay,
then. Student loan benefits. Employer education assistance on paying student loans. That is capped at $5,250. It is only for the employee, not for the spouse or the dependents. All right, you pay that. It's deductible for employers. And this isn't something new. It's just something that's more emphasized now. Only excluded from wages if it qualifies as a working condition fringe benefit or a qualified tuition reduction. And does not apply to payments made on or after January 1 of 2021.
Now, Fred, we commented on this before. We don't think there's a discrimination provision here, right?
No.
Right?
No.
Other than it can't be the 2% shareholder or the 260 IRC 267 attributable people, but I can give it. I like Ellie and I don't like Fred, so I can give Ellie assistance and skip Fred.
You can do that. I remember talking about it in my webinar on the 4th.
Okay. Just saying. We had spoken about it. Press F5, Linda.
Oh, I thought she was doing a Frozen reference. Sorry.
And it's only for this year. So next year you can't offer it as a benefit. Keep on your employees.
Okay, Ellie, you're up.
So, more math. The employee retention credit. Again, this is based on what JCT says. IRS does have an FAQ out that you can go to. The employer can claim the credit against applicable employment taxes for each calendar quarter. In the JCT document, which is in your handouts, they call the employer side of Social Security the OASDI, and they explained what that was. So in this example, Colonel Brandon had applicable employment taxes of $10,000. Now, the thing about the employee retention credit is that you're going to think of it the same way you thought of please excuse my dear Aunt Sally. Order of operations. It is at the bottom of your order of operations for credits. So Colonel Brandon had $10,000 of applicable employment taxes. He also had a credit for research expenditures of $4,000. He got a $3,000 credit for paid sick leave under FFCRA, and then he got $5,000 ERC. You take the $10,000, and from that you first subtract the research expenditure, and then you subtract the sick paid leave. So $7,000 was applied to the ERC. Remember, he got the $10,000 employment taxes. So apply the ERC to the remaining $3,000. So $10,000 minus 4 minus 3. he has a $2,000 overpayment, he can claim that refund on Form 7200. So it's an order of operations for Form 7200. And the next slide is also an order of operations slide. You can defer your payroll tax on the employer, Social Security, and you can take employee retention credit. They're not exclusionary. It's not one or the other. Here's a equation in the middle that is directly from the document. It's a little, please excuse my dear Aunt Sally. They can't use this if your employer is hiring your children. And then you cannot use this if you get PPP loan forgiveness. And it's also important to note that qualified health care counts towards wages, but only to the extent that it's excluded from the employee's income. So for Form 7200, and I think we're planning on doing a webinar about this in the future. Yeah, thanks, John. I saw that I had done a little typo there. It's PEMDAS, not PEDMAS, although in the UK it's actually PEDMAS. You're going to have to think about Algebra 2 classes and the order of operations that they taught you.
Okay, payroll deferral. All right. It's the employer's share of Social Security, but not Medicare. Okay, so in most of these things, Medicare, it continues, you always pay that, and these types of things are not going to be, excluded, deferred, or whatnot, because it needs to be in the system. So what you get to defer for, if you're going to use the payroll deferrals, and for the payroll deferrals, if you chose that, you can use payroll deferrals up until the time you get your PPP loans. You can't use it once you get the PPP loans, though. This is 6.2% of wages, compensation, or net earnings. So it's for the self-employed people and the partnership people as well, up to the wage limit of $137,000. This means only self-employment portion of Social Security. So obviously when we're self-employed, we're paying both sides of it. Only the employer portion is the part you get to defer. The rest you still need to pay. And you can reduce your monthly, your weekly, any of your deposits by that SS portion that you do choose to defer. If your monthly taxes, let's say, are $10,000, $6,200 of that is Social Security. Then $3,100 of that is the employer portion. That is what you get to defer. All right. Snape made $80,000 net bottling and selling Amortentia on Diagon Alley.
Diagon Alley.
Diagon, darn it. All right. It's the most powerful love potion known to wizard kind. Now you know how I got Leah. His SE tax is 80,000 times 0.9235. And if you don't know why we're doing 0.9235, sorry, you'll have to learn that on your own. We multiply that by the 15.3%. Says our SE tax is $11,304. Okay, and the reason it's 0.9235 is because half of the Social Security tax is technically a deduction. So that is how that works for the 9.9235. Of that $11,304, of that $9,161 is Social Security tax. All right, you cannot defer the Medicare portion. Half of that 9,161 is $4,581. That is the part you can defer. That means you need to pay $6,723 by April 15th of 2021. The $4,581 that is deferred, you can pay half of that $4,581 by December 31st, 2021. And then the balance is due December 31st, 2022. All right, upcoming events.
Fred, can you go back just for 10 seconds? I'm going to say one thing on that. And Ellie mentioned it, and I wonder if we lost it someplace. Didn't we say that those numbers won't affect your 2210 penalty?
No, they won't. They won't.
Right. Right. I'm just saying that there's something about that it will not affect your underpayment penalty. There's no interest if you pay it on time.
Correct.
Right.
It's excluded from the whole calculation, I guess is what I meant, but never mind.
Lynn, I believe it's March 12th. I always get the March 12th, March 27th, but you can elect deferrals as of March 12th, right, Ellie?
I need to look that up. I
Yep.
have ERC in my head, and ERC is March 13th.
It's the 12th or the 20th. It's one of those dates that you can Google
I
it.
thought the deferral was the 27th because the 27th
Was the date they signed it.
The deferral,
Yeah.
and the deferral came with the CARES Act, and the retention credit came with something else.
There you go.
Right.
There's been a couple questions on employment retention credit. It starts March 13th. It is till the end of the year. You can take the employee retention credit until you get the PPP loan. So if you're waiting for that, you might not get it. I'm putting the link to the FAQ on this, on the employment referral. Oh, I just put the link to the employee retention. I'm sorry. I will put the link to the FAQ on the employment retention credit in the chat box. It's important for the employee retention credit. You have to meet one of two tests. The first one is either a significant decline in gross receipts for the same matching quarter. So Q2 2020 compared to Q1 2020, Q2 2019, was there a significant decline in your receipts? Secondly, the other test you must meet is if you have been ordered closed by the government. So many restaurants, I think, barber shops, hair salons, masseuse parlors, whatever, they meet those requirements. You only have to meet one of those tests, either significant decline or ordered shut by the government. You don't have to meet both those tests.
Ellie, the significant decline, isn't that defined as 50% now? Right?
Yes, it's less than 50% of its gross receipts. So if you had, 100,000 Q2 2019, and now you're 48,000 Q2 2020, you meet that test. And in the link there in the FAQ, it talks about what to do about the SBA loans. So right now, many people are applying for the SBA loans. They're not getting them yet, but they still have to make their monthly deposits. So go ahead and look at the payroll deferral and look at the employee retention for the month of April, because you might not know if you are going to get the PPP loan, maybe not till next month.
If at all.
If at all.
Hey, thank you all for coming in. I apologize for running over, but running over is because we were able to add a whole bunch of stuff that happened in the last 24 hours. So thank you to Fred and Ellie for putting in the additional effort to make that happen. Because sometimes I just say, hey, we're doing this, and it's not supposed to be a dictate. It's supposed to be a question, and I forget the question mark. So we have a couple upcoming things. We have net operating losses with Kathy Morgan coming up. 2 different sessions on May 6th, May 13th. You don't need to go to the first one to go to the second one, but it might not be a bad idea since we've only had NOL carry forwards these days. And she's going to cover carrybacks. $79 a class, $129 for both. I think the coupon code is not working, someone told me, but it'll be today, let's say through the weekend, $109 to get both. So that'll be through the weekend. And then Mr. Dombrowski half said he would do it, so I've now committed him to our 3rd annual Giving Tuesday, the Tuesday after Cyber Monday, which is the Monday after Thanksgiving. 2 free ethics credits. This year, it's IRM Dombrowski. In the case of the doctor's mistress was the innocent spouse. It's basically going to be an exciting innocent spouse case where we go through the related ethics in dealing with everybody. So it should be fun. If you have any questions, John at Tax Practice Pro, Ellie at BQ Tax Pro, Fred at BQ Tax Pro. And that's it. Everybody have a great weekend.
Thank you, everybody.
Bye.
I hate it when the webinar doesn't want to end.
Ended the webinar on 8.
Oh, you get that little red bar too?